This is Scott Becker with the Becker Private Equity Podcast, and today's discussion is what we'll call the conundrum of the day. And here's where we sit right now. The Fed is going to have a hard time cutting rates until inflation slows or the labor market softens. Today, the Fed and everybody else was surprised by adding 303,000 jobs in March, which was far more than expected. Now, the conundrum is inflation can't really slow, and the market can't really soften until the government stops injecting a couple trillion a year of deficit spending into the economy. So you've got this very situation, this very challenging situation. You've got the Fed and the markets want the Fed to cut rates. On the flip side, they can't cut rates until inflation comes down, and it's come down some over the last year, and until the labor market softens a little bit, because that's a big part of inflation. And it's very hard to do that or see those things happening with the amount of deficit spending that we're doing. So this is sort of an irony, a conundrum, whatever you want to call it. Thank you for listening to the Becker Private Equity Business Podcast. Again, as always, let me know what you think of this. If you're the first person to text me, 773-766-5322, we'll send you a $100 Amazon gift certificate for listening and for letting me know that you're listening. Thank you so much for joining us on the Becker Private Equity Podcast.